Sometimes forex trading is a wild and woolly place to be. That's why Hugh's here, to pose your questions to Walter, the naked forex guy. Hugh's got questions and Walter's got the answers. Here at the Truth About FX podcast.
Hey Walter, when you're doing some backtesting, do you ever test multiple markets or multiple time frames at the same time in Forex Tester?
Yeah, I used to do this, and what I found is that you end up messing up. You miss some trades, and then you go back in backspace and go, oh, I would have taken that. But the problem with that, of course, is now you've seen the future, so it's kind of like you're using hindsight bias in your backtesting, which is awful. So I just stick to one pair now. I know it's painful. I know it takes forever. And I know people don't like to do that, but it really does make sense, because otherwise you have to like advance one bar, check all the charts, advance another bar, check all the charts, and that's painful too. So I would just go with the one. And if you're trading the weekly charts or the daily charts, you're not going to get a lot of trades anyway, so you can blow through those data. Those data might take you only, 10 years worth of trades might take you only, 2 weekends or something like that, or 10 hours of trading. So testing and forex test, so it's not that big of a deal. So I just break them up like that. And then what's cool, here's a tip. You can take all of that data and put it into a spreadsheet and sort it by date. So what that means is you'll get an equity curve of what it would look like if you were trading that in the real world. So you've done all this Euro-Yen testing, Pound Aussie testing, and Swissy testing. You put those three pairs together and sort by the entry of the trade, the date entry when you get into the trade. And then what you have is you have these losers and winners that are popping off on your spreadsheet, right? And you can draw your equity curve based on the balance of the account, and then you've got some really cool, because you can see how trading multiple markets kind of flattens out your drawdowns and things like that. So yeah, so that's a really cool way to see that. Yeah,
that's a great tip. Well, while we're on the topic, putting the data into a spreadsheet, what else could you do with a spreadsheet that maybe you couldn't do in Forex Tester 2?
Oh, well, with a spreadsheet, you can change your risk parameters. So let's say that you're trading 1% risk on each trade. So you could automatically change that in your spreadsheet, right? And that will change your whole results, right? So you would just multiply that. So if you're trading 1% and then you wanted to change it to 1.5 or 2 or 2.5 or 3 or whatever, you could multiply that whole column where you know what I mean? And then what that would do is that would basically increase or your drawdown, the depth of your drawdowns and the peaks of your equity highs and things like that. It'll just show you kind of the effect of taking on more risk on your bottom line, on your equity curve. Another thing you can do with the spreadsheet, what I like to do is kind of see, okay, well, how many, obviously you want to get your win rate and all that, right? But then what you want to do is you want to go, well, how many losers am I getting in a row? And how likely am I to get X number of losers in a row? And so you can plug those into a calculator. I'll actually link that up in the show notes for this episode. But you can go to a calculator. You plug in your reward to risk ratio, okay, which is your average winner size divided by your average loser size. You plug in your risk amount per trade, and then you plug in your win rate, and then you say, okay, I want to know how likely it is that over the next 1,000 trades or 10,000 trades, I'm going to have a drawdown of 10% or 20% or whatever, and it'll spit out that data. It'll say, well, you have an 88% chance of a 10% drawdown. So you know that if you're risking 1%, you're definitely going to have a 10% drawdown. It doesn't sound like a lot, but a lot of people do freak out when they get to that 10% level or 15% level. They start changing things. So that's a really cool thing to do too, I think, is to get your numbers, your average winner, average loser, your win rate, and then what you do is you plug that into that calculator that I'll give you guys, and really sort of assess, okay, now, because what you want to do is plan for the worst. You hope for the best, but you plan for the worst and go, all right, now I've got a 33% chance of a 15% drawdown. That's a 1 in 3 chance that over the next 1,000 trades, I'm going to have a 15% drawdown. Well, that's a pretty solid shot. So you want to, anticipate that, and you don't want to freak out and think that things are falling apart when that happens, because you already know that was likely, and now it's happening. So.
Okay, cool. What about day of the week analysis? Do you ever do that?
Is that what you're getting at? Yeah, good point. Yeah, I do that. I know a lot of traders. It's funny. We had an interesting conversation about that in the forum, but basically, a lot of guys have taken me up, and I said, "Well, look, go ahead, test it, see." And a lot of guys have posted their data, and they found that Mondays and Fridays are awful for taking daily chart trades. And some people say, "Come on, Walter, that's crazy," or whatever. But there's a book. Actually, I should tell you guys. I'll link that up in the show notes too. There's a trading book that you should check out. If you don't believe this, if you think this is a crazy idea, there's this trading book that has all of these crazy trading systems just based on these sorts of things. Like if it was built for like S&P 500 and stuff, but basically it's like if Tuesday is an up day, then sell on Wednesday, and all these weird rules that you can see that these are sorts of trading systems that people use. But so that was. I think it's like called Trading Secrets of the Inner Circle or something crazy like that. It's this weird book. But yeah, so I definitely avoid Mondays and Fridays. I find them to be awful, and you can kind of see that in the spreadsheets too. So that's a really good point, because you can make it so that the spreadsheet shows you if a day is a Monday or Friday or whatever, and then you can flag those. But I just don't take them when I do my testing. I actually just skip through the Monday and Friday trades in forex tester, so I don't have to I don't have to weed those out anymore. Yeah.
Okay, cool. Well, that's a lot of great tips. Thanks, Walter.
Okay, see you, Hugh. Bye.
Bye.